Hey, welcome back to Mortgage Insider, where we keep an eye on the rates so you don't have to. We're going to check out mortgage rates as we get into April next week. We'll start to see more and more big reports coming out starting this Friday. At the very end of March, we're going to have PCE, the Fed's favorite measure of inflation. They're not going to make any Fed policy moves based on this for some time now, but will give us another read on inflation. Next week, we'll get jobs reports. We'll get a lot of good data that's going to have a big impact on the direction of rates going forward. So this week, let's check out the charts. Mortgage markets this week finally starting to tread water as we're getting into the midweek. 13 basis point improvement on the mortgage-backed security prices. 10-year Treasury finally flat. 10-year Treasury coming back up after hitting its low back on March 24th. So if you happen to be buying a home and you could lock your loan in March 23rd and March 24th, those were the days. Since then, we've seen a turnaround. SVB, the Silicon Valley bank that went under just this last weekend, finally found a buyer for their assets at about 25 cents on the dollar. So some pretty poor assets held at SVB, but from another bank's perspective, purchasing that was really a help to the markets. This shot the Treasury market back up, so those interest rates have been trending higher this week. We're starting to see the rollover here. These are the averages over time, so that 25-day average, 100-day average, 50-day average were well below those and actually broke below the 200-day average for a short period of time before bringing it back above. So we're seeing rates similar to the comfortable rates we saw in January before the big run-up overall back into the beginning of March. Really volatile last 30 days. So a lot going on there for people looking for homes. There's no way to time this. You need to be watching for the opportunity to buy a house, and then when you get into rates that come down one week and then they skyrocket the very beginning of the next, it's hard to manage that. So keep an eye on these updates each week, and we'll keep you abreast of what's happening when the time is right for you to lock in a loan rate. So as we use that 10-year barometer as a way to see the rates, we're jump real quickly into the mortgage-backed security market. Now these work in the opposite realm here. These are the investors buying these loans. So when they pay a higher price, that's lower interest rates. So that takes us back to March 24th, March 23rd, when we saw a huge improvement after the volatility that came post SVB being taken over by the FDIC. With a little less volatility this week, we're going to hope for some better inflation numbers. The lower the inflation, the sooner we can turn the corner on these high mortgage rates. The Federal Reserve is definitely pressing their foot on the gas. Gave us another 25 basis point increase in the federal funds rate last week. We have seen actually an improvement overall with interest rates since that statement. And they did raise the short-term interest rate, their long-term guidance. They took away the likelihood of having more rates in the future. They didn't take it off the table, so we could see another 25 basis point hike at their next meeting, but they did leave it open-ended that they could make their change or their pause at their next meeting. It would be a welcome relief, but we'll have a few weeks before we get to see that. Have a great week.